Hey everybody, this is Jim at sp500chart.com. It is Sunday afternoon, why do I keep saying August? September 13th, 2020. I keep saying August because I've done that 2 or 3 times in the past week. Anyway, it's Sunday afternoon and we're going to take a look at the chart as it ended on September 11th, 2020. After I remind you, the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm still, after 10 years, still not a licensed financial professional. 10 years from now, I will not still be a licensed financial professional, but I will probably still be a guy who draws lines on charts. So let's take a look. First, a fairly broad overview. What we have been looking at here is what I think is the predominant driving force in the S&P is this rising wedge. And it started back at the end of June, and remember we formed this triangular consolidation here that served as a continuation pattern, because up until that point we'd come off some significant lows back in March. We come up nicely, then we go sideways for about 3.5 weeks, well actually 6 weeks if you go all the way back here. But for about 3.5 weeks, we form a triangle. We break above that, and then we continue that and move higher. So this was a continuation pattern in the way of a consolidation triangle. That's when we started to form this rising wedge. The rising wedge continued for a good number of weeks, then threw me completely for a loop, and probably you too, and probably a lot of other people, as we broke above rising resistance and then made a much smaller wedge right here. This little one broke above rising resistance, and that was when I just sort of said, guys, this is a setup. We're getting ready to fall, because it just that this is not a rational move. So I think, at least in the short term, that what we saw take place week before last was probably emotional buying, and that can be for 2 reasons. It can be FOMO. You know what that is? Fear of missing out. People thinking, oh my goodness, this market just it just keeps going up. It keeps going up. I'm missing out. So people pile on. The same people who sell at bottoms buy at tops. And the same people who drive stock prices and index prices underneath descending support at bottoms drive it above ascending resistance at tops. I don't think this is a big deal, but it is indicative. And then we saw late in the previous week, we saw that was indeed the case. As we fell back down through this pattern, then finally broke out to the downside, which was what we were expecting all along. It's just this was a surprise up here. Now we've had a good 6 days of overall selling pressure, even though we have been up a few days. As a matter of fact, if we look at Wednesday of this past week, we were up big. But now let's dissect a little bit what's going on. First, it was a shortened week because of Labor Day. So Tuesday was our first day of trading. We gapped down, and we gapped down in a substantial way. As a matter of fact, Tuesday was really a pretty rotten day. we were down, I can't remember here going by memory, but 34, 31. Well, yeah, we were down like, what? Close to 100 points, 90 something points. I can tell you here in just a second for sure. Our last was 33.31 the day before. Last was 34.26, down 95 points. Then on on Wednesday, the second day of the week, because we didn't trade on Monday, we saw a big recovery. So there's our big loss, big gain, then a big loss, and then essentially flat. I think there are some signs here. And remember, we talked about how we might find as our first area of potential support might be this little line that's highlighted here. And remember what that is. That goes back. That's our first, other than this one right here, which was a gap up on the 24th. Never mind that. We had that line pretty much tagged with our previous all-time high that was set much earlier in the year. But this line is a small gap that we saw in early August. There's also another gap line here. Remember, gap lines are areas where you might find some support. This was a tiny gap, so I don't think it's going to necessarily give us much. But this one right here is perhaps a little bit more a candidate for gap support. But just the same, if you look at it, we did bounce there on Friday. Not only that, but even though it's certainly by the smallest of margins, if we look at a very short-term trend line there, we started to just get a little hint that maybe we're reversing back up. But that's going into a weekend, so I would pretty much discount that and just say that's noise for now. If we open and we head up tomorrow, then that might be a technically significant move above this short-term line of resistance. And then we've got another line right here. This also should be considered resistance. This is the line that was the two tops before the significant sell-off on Monday, and then the second significant sell-off, excuse me, I said Monday again, didn't I? On Tuesday, and then Thursday. So I think this line also may be somewhat technically significant. In other words, if we get over this, then I think we probably come back up to back test our line at about 35.20. Finally, I'm going to get rid of this channel that was drawn back here, and what I'm going to do instead is I'm going to take this line that starts way up here over 35.80, and I'm going to draw it right there. So that, I think, may be yet another line of trend line resistance that if we get over, then we should, again, that would be another sign, a positive sign that we are ready to head back up to at least back test the pattern that we fell out of. Guys, I've kept saying all throughout last week that this is sort of a noisy chart, and it is, but now it's starting to maybe show us a little bit more. It's not a perfect pattern or anything. Our bottoms so far are not really lining up. You know, I mean, maybe we got something kind of like that. If that's the case, then you could maybe look at what we've seen over the past 6 days, and you might construct the idea, or at least floated out there, that we may be seeing now something of a descending wedge. Though it's a much more drastic descent than what we had in the ascent back here. If you want to sort of do the little test thing, we can throw a midpoint line on that, and I don't think that looks quite as strong as some other cases that we've seen, but I'll make this very, very light blue here in the middle, just to keep it sort of on the radar. So right now, the chart looks to be pretty cluttered up with lines. I get that. Forgive me for that. Just trying to make some sense out of this, and there are, like I said, there are a number of trend lines that we can try to draw here that unfortunately it's not a super clear picture. So there you have it. The week we were down for the week, but all of that down was pretty much encapsulated in Tuesday's gap. As a matter of fact, where did we close the week? Pretty much right where we started it. So we closed the week at 34.32, and where did that gap down take us on Tuesday? Very early, about 33.42. So let's just keep an eye on it, see if we can work our way above some of these lines of resistance, see if maybe this is a wedge, and see if maybe one of these lines that we've talked about, gap support, old neckline support, see if some of these, see if some of these areas indeed are significant support enough to overcome what should be, from the wedge alone, enough selling pressure to take us down to just over 3,000. That's what this pattern says right here. This rising wedge, now that we've broken down, again, I just sort of, absent any good reason to do otherwise, this pattern typically would take us back to where that pattern started to form. And that's down around, like I said, in the low 3,000s. If there is good news, if you will, the past 8 days have taken us from the highs up here around 35.80 down to as low as 32.20. So that's 260 points. No, 260 points in just a matter of days. Am I saying that right? Yeah, the high up there, 35.80. The low, 33.12. Yeah, that's about 260, 275 points in just a matter of days. And, we survived it. And if we end up going down more, I guess what I was going to say was, the good news is we've already seen a sizable chunk of that downside target already be absorbed by the markets. So where we closed here at 33.41, I want to eyeball it and say that would be about 40% of the way down to this line, if we even make it down there. So, hey, let's just keep watching it together. For right now, the week was somewhat of a confusing thing, and I expressed that to subscribers throughout the week. But now I think we got a few more trend lines on the chart, so let's just keep watching it as we start our trading on the week of the 14th. So, thanks for taking time out of your weekend to watch this, and as always, thanks for your very kind support. Take care.